We're going to talk about 5 ways to get rich in a cryptocurrency bull run. These are all important. So hi everyone, welcome to the channel. If you are new, please do subscribe, hit that bell button, like and comment. Please also follow me on socials because I'm doing a little bit of a giveaway right now. So this is a very educational piece. If you're new to crypto, if you're an experienced or a seasoned investor, or if you are a trader and you want to try and get over some emotional sort of torment in your body, psychological sort of elements as well, these 5 things will probably help you out a lot. And these 5 things are something that I do all the time, and ultimately it all becomes one big circle, and it becomes one easy, very quick, simple method to manage essentially, but it's over a long period of time, compounding. Now, I've spoken a lot about identifying value, and that's rule number 1. 5 ways to do it, and that is number 1, identify value. Simple as that. You cannot go any further than finding an altcoin, doing your research, and discover if it is actually, or if it's not, undervalued. There's been coins that have really exploded over the last coming months, and people have been screaming, cover this, cover that, it's amazing, it's amazing. But realistically, they've already ran. They've already made a massive gain. One obvious option here is Ocean. People have been screaming at my YouTube channel, cover Ocean, cover Ocean. But realistically, it's yeah, you know, the time to buy was in the summer, in the spring, whatever, at 5 cents, and people were screaming at my YouTube channel, mate, do it, it's 60 cents, it's looking freaking awesome, it's all-time high. Why? You need to identify value, and that's rule number 1. The second one, we need to look at the higher time frames. We'll go over that in more detail. Then you got number 3, risk management. What risk are you putting in? Number 4, using potential leverage. I'm going to come on to that in more detail in a second. And an exit strategy. But I'm going to decorate this up into a real nice piece for you to kind of go, right, I get it. This is easy. I can invest with calm. I can invest without worrying. I can trade without worrying because I'm looking at certain things and I'm calm. I'm collected. Too many people come to me and go, when do you buy? When do you sell? I've sold. Damn, is it going to go lower? I'm scared. All those kind of things. I get it all the time. People sell expecting it to go lower when it's going to bounce. I'm going to show you exactly what to do. So, this is a good one. Let's find out though. Most people, when they come to the world of crypto or investing, charting, whatever, and the first thing that people look at is the lower time frame. It's like they want the action, they want to see it, they want to see this stuff move, they want to see, oh cool, this is amazing. Realistically, I only use the weekly and the daily time frame, mainly the weekly time frame. The daily time frame is used for execution of orders, to find and discover the pullback to get in, using the weekly time frame to manage my overall position. When I go back and look at my investments on RSR, I look at my investments on Zilliqa, Utrust, Voyager. They were all identified due to a trend bias that was sitting nicely on the weekly time frame, and I used the daily time frame to pretty much try and get into that. Now, we're going to reverse engineer what I've just spoke about. You need to identify value, and if you're looking at the Bitcoin chart, the more you zoom out, the better it is. And the one tweet that I love to put out, and all the time I do it because I like to wind people up, is zoom out. Zoom out. And people go, why? It's dumping, it's looking crap. But when you zoom out and you look at the weekly time frame, well, look at that. We are still in a parabolic uptrend. And you also need to address the question, number 1, identify value. Is Bitcoin at the time right now undervalued? Is it a good value proposition for an investment? Well, no, it's not. Why? Because it could go lower. It could easily go lower. If you are now looking at this and you are on my channel because Bitcoin has went up towards all-time high, you're doing things wrong. You need to reverse engineer your brain to think, Bitcoin's low, I should be buying this. It's a great opportunity. The people that were buying in and around these levels, in and around this level as well, where it was looking really promising and still undervalued, were the ones that have won and are winning right now. The people that have been in the market since like before I was in, I saw Bitcoin at a very good value proposition. The people that buy at tops lose. Pigs get slaughtered. That is the overall term. So when you're looking at altcoins, let's look at altcoins as well. Let's look at let's look at something like, I don't know, what should we look at? VeChain. VeChain's another great example. Don't have much data on here, but VeChain, it's, in my opinion, a real solid long-term hold. But is a value proposition there? Well, as it stands, we could be getting a very, very good value proposition. Why? Because we've identified key levels here where we could be retracing. Now, if we go on the weekly time frame and we look at this, we know that this level here, let me just highlight this a different color, is the 618 level. This is where the smart money was collecting VeChain in and around this region, because that is where the key psychological levels of value is. Identify value. Why? Well, it's retraced about 60% of its entire move from the previous level. It has gone up, bear with me, 1,268%. It's got the eyeballs. It's like, whoa, VeChain. I've been invested in VeChain for a while now. I love it. It's one of my favorite coins. But people's psychology is not identify value, but get the rush, get the gains. It's going to go higher. It's going to keep going higher. It's going to go higher. If you cannot buy a coin that is on a 68% discount, which will then yield you more money, or no, 59% discount, sorry, 61% if you're looking at terms. If you're looking at that, and it went up another 111% from that point, give or take. Identify value. Comes on to number 2. What's number 2? Weekly time frames. I'm on it. You've probably already seen it. What can you use to identify value? Well, you can identify value using 2 things. You can use an exponential moving average, a crossover method, which is like this, when they cross over to the upside, to see and identify a trend. A trend is easy to see if you're using stuff like an EMA, a moving average, whatever. You can use multiple different ones. I've covered them on loads of videos. 34 is good. The moving average 20 is good. The EMA 8 is good. The EMA 13 is good. They're all good in reality, but you've got to try and think, well, what is it in terms of correlation with the price? It removes the noise. If it is crossed over and you know by time that when you zoom in and you look at things and it's kind of bearish, you know when not to buy. When you want to buy it, you go on the crossover. Like if you go back, let's look at another one with a bit more data. Let's look at Ethereum, for example. If you're looking at certain things and you know that in your head when you look at things on the weekly, when an EMA crosses over and it still remains crossed over, you know that, yeah, it's in an uptrend. It's looking strong on the weekly. But when you then go on to other time frames and you're looking at the 3-day chart, well, you know that on the weekly time frame, this will also look very, very good on the 3-day chart, as you can see. If you're looking on the daily time frame, well, what do you know? Well, actually, if you zoom out, you can see it's going up. It still is going up. Identifying a trend is key. But what people tend to look at, they tend to go like this, to zoom in really going, oh my God, we've lost what, how much percent in a day? Oh, it's the end, 9%, gone. Oh, we actually wicked a lot lower than that. Oh, what have we done? We found support levels. We've got to look at those support levels. Now, when people panic, they really do panic. And they go, oh my God, this is horrendous. I just don't like this. But when you actually zoom out and you look at the overall trend, well, look at the trend here. From the start of the year, Ethereum was a solid buy opportunity, potentially in and around that $200 level where the EMA crossed over. Yes, it was still in a long-term downtrend, but ultimately, value proposition, you've got to think value. We have been $1,400. We've been here and rejected at 360. We've rejected at 290, but you're scared to buy at 175. You've got to look at that and you think, value proposition, is it there? Yes. Weekly time frame, is it showing an uptrend? Yes. Tick, tick. Well, where do you go from here? Well, you ride it. You ride it and you then manage it correctly. Risk management is number 3. Now, why is this important? Too many people overexpose. They go, oh, it's going to be amazing, going to go up to this level. Throw my cat in there, throw my dog in there, throw the house in there, throw the car in there, throw everything in there, and I'll live on baked beans for a week. Well, that's the wrong way to do it. And this is what it's going to lead on to nicely with leverage in a minute, which is why I'm going to explain that in a lot more detail. Now, when you invest, you should only invest what you'd afford to lose, realistically. Whether you're a trader, you can trade like this, or if you're an investor, it's simple. Positional holds are simple, right? As a trader, you will look to buy and sell low to high, right? If you're going on the leverage side of it, I'll explain that in a minute, but you can do it the other way around, going short. But with risk management, you've got to then recycle your position. I've mentioned this in previous videos where you use profits to compound into other elements. So say, for example, here, you bought Ethereum on this EMA crossover, right? You were thinking, well, realistically, good value proposition. It may well go up to this level, which could actually, you could probably argue, right, let's have a little look at this region. Actually, tell you what I'll do, identify entries, just to give you an insight. If you're looking at the weekly time frame and you're seeing this, by the way, and then you go to the daily time frame, this is how you can kind of get involved. Now, if we find this, now what have we got here? Just to kind of input this and give you a bit of market psychology. Oh God, come on. Let me just zoom in on that level. There we go. Hi. Apologies. So we've got this big pullback here, and I identified it on the weekly time frame. It's huge, it's aggressive, right? But every bull market, every cycle has these kind of pullbacks. That's 22% drop on the daily time frame. That is a potential entry zone when you look at the obvious. Look at that for a retracement in and around. It goes to that key value proposition level, 61.8%. Psychological with the Fibonacci, right? That is a pullback area. Now, the reason why I'm saying that's because it's been showing an uptrend for the best part of a bit, but it's still got good value. It's still showing pullback. It's showing a trend. And when you get an opportunity where it's an obvious pullback and it's a discount at 22%, well, there's your entry. When you go onto the weekly time frame and you're looking at that level, you know that the EMA's crossed over. It's been crossed over for 2 weeks now. It's looking really good, and we've just found a support level in and around a region. It's pulling back. I'm going to take the gamble, the risk, that motive that I'm going to invest in Ethereum at $175, give or take, because I know that it could go higher. It could easily go to where this extension is, and it did. It popped it, flew it flying. Look at the confluence between that, by the way. Beautiful. I love Fibonacci. But that is where the marker was. That is like, even if you are looking for a positional hold and you're looking at this level going up to there, that's still a 60, between 50 and 60% level, right? Still a lot of money to make in a positional hold, realistically, in any market, but obviously went a lot higher, we know that. So that gives you that element of risk management. Have you bought at a low level? Is it good value? Are you using the weekly time frames to identify a potential pullback? Well, yes, you are. You've looked at a crossover. Cool. It's pulling back. Cool. You've been patient. Cool. How much risk are you putting on the table? What do you do next? Well, as I've already just mentioned, you manage it. You manage it. And you use bits of those profits as it goes up, and it continues to go up, and it continues to go up, to then take money out of it and recycle it. Because if you did buy it at those sort of levels in these regions where it is undervalued and you've done all the other bits and pieces, well, there's no reason for you to be out of this position completely. But there's actually a load of places where you could have took profit. Realistically, if you put like a couple of $1,000 into here around this region, and like look at these, 170, 180%, whatever give or take from current price levels right now, it's obviously been higher. There's money there. There's money there to be used, and you could use a part of that money to essentially move it elsewhere into altcoins. Obviously, if you go on altcoins, the percentages are a lot bigger using the same methodology. So that's number three, risk management. Now, moving on to the likes of people wanting to use leverage, you can, because you can go the other way. The place I recommend is Bybit. I've always recommended this for the last 18 months. There's a link below if you want to use this, and you can use no leverage if you want to. You can go 1x, but you can go short. You can bet against it. So instead of selling at the tops or in Tether, you can actually ride it and actually grow Ethereum or whatever altcoin you wanted to use based off what they've actually got in here. So Tether or the actual underlying asset. So you may think, well, Bitcoin's going to go down from 18k down to like 16k. You can go in a short position and actually bet against it realistically on the trend going down and actually grow your Bitcoin without risking anything additional. Kind of important. It's the exact same thing. So check it out. But again, the same situation. Well, what happens here in a situation like this? Well, you've got to think value proposition. You flip it to the other side. Is it overvalued? Do you think it's going to come down? Is it looking pretty bearish? What does the weekly time frame say? Well, the weekly time frame is telling us, well, actually, the EMAs have crossed over. That's not looking good. Yeah. Obviously, it pulled back up. Nice little resistance rejection, but it's gone back down again. Look at the fact of these EMAs. Imagine, right? You were thinking to people, well, everyone loves Ethereum, it's looking good, but it's bearish. Bear market's in. Well, that small bit of leverage, or no leverage at all, you can bet against it, and you're right. You were right to not invest at this point. Dollar cost averaging is key. but so is riding the trends is also key as well. You may be thinking, well, actually, I'm never ever going to invest in this until the EMAs cross over on the weekly. Well, guess what happens here? $140, boom, happy days. And that comes on to number 5. If you don't want to use small leverage, that's absolutely fine. No forcing at all. You don't have to use any leverage, but you can go short on it. But it's all one circle when you press an exit button. Why not use an EMA? EMAs as a crossover is a very, very simple and easy tactic to kind of remove the noise and not worry. Not worry about these little spikes to the upside, what happens on the weekly. Look at the gaps between that, it's still in a downtrend, it's still looking horrible, right? Realistically, we know past data. It's likewise with this. This, it still looks bullish, even though today and over the last week, this has been an aggressive dip. When you think to the likes of most people would be selling right now. People would have seen wick to wick over the course of that week. We've got a 16% drop, right? People will be panicking right now. But realistically, we could be looking at $500 bounce, $512. We could actually be looking at EMA retest of 460, but we could look at the EMA at 430. If you've been investing in this coin from this point, there's no need to panic, because the one thing that does happen with exits, it gives you absolute certainty that the trend is in your favor. But people tend to sell when these happen and it carries on going higher. Don't panic due to the fact that it's dipped a bit and it's correcting. You got to look at structure, you got to see what's happening. But you know, I've been in the bull run in the past where I've sold far too early. I sold Ethereum at $300 from $14. Gutted really, because it went a lot higher. It would have made me way more money. But it's one of those things that happens. But you've got to learn this sort of thing yourself. An exit is key. Now, another exit can be target levels on the EMA. As I said, a crossover, where it does cross over. Target levels on the Fibonacci. Key levels of structure of rejection as well, where you think to yourself, well, actually, what's happened here? Well, actually, we've had a massive impulse here. It pulled back down into the 382 levels. And actually, what happened here, it actually hit this level here, 636, above one of the extension levels. That could be a place where you can go tactically. You can be like, well, actually, take 20% out there, maybe? I don't know. Everyone's different, but you've got to look at absolute certainty where you think, well, actually, where can profits be taken? You've got to think these are big moves and they don't go forever. But realistically, if you are looking at these weekly time frames and you're looking and you're nice and chilled out and you're thinking, right, what is actually happening? People go too early. They jump in. They jump in at stupid levels, or jump in too late, actually, in most cases. The weekly time frames, even the monthly time frames, etc., give you a lot more clarity of direction. If you're looking at this chart and you're thinking, well, what's happening? Well, if you're looking at the monthly time frame, it's looking absolutely savage. It's looking bullish as hell. Obviously, key levels down here are going to be interesting. Look at where this EMA is kind of potentially going to be opening in the next month, in and around this region. It all stands for something, and this is a bull market. Too many people are getting really upset about small dips. So, go through the numbers again. Identify value number 1. Is it undervalued or is it overvalued? Weekly time frames. Use the higher time frames because they have much more clarity. Number 3, risk management. Don't risk what you can't afford and manage your trade. Take little bits out at certain levels. If you're happy with it, move that money elsewhere. It makes life so much easier. Small leverage if you need to, or most importantly, if you want to use no leverage, you can go against the market, but that is the ultimate trend. If it is in a downtrend, nothing goes up forever, remember. And number 5 is an exit. Profit, profit, profit. Whether that is a target, a round number, a crossover, anything, right? Make sure you bag the profits. So, hope you enjoy. See you later.